Balaxi, depósito e distribuidor de medicamentos.
Nós somos a Balaxi.
Fornecemos medicamentos de qualidade portuguesa e indiana em todo o território nacional.
Aqui na Balaxi fornecemos todo tipo de produto.
Faça já o cadastramento de sua farmácia e receba os nossos produtos.
Nós somos a Balaxi, uma marca nacional. Venha já fazer o seu cadastramento.
Obtenha seus produtos ligando para o 929 58 96 89.
Fornecemos produtos de muita qualidade. A sua farmácia, a sua clínica, o seu centro, o seu hospital.
Estamos abertos de segunda a sexta-feira, das 8 às 15 horas. Localizados no São Pedro, na estrada Cala-Uambo.
Balaxi, primando pela sua saúde.
Balaxi, depósito de medicamentos.
Welcome friends, my name is Avinash and I welcome all of you to another episode of Face to Face series where we introduce and enlighten all our participants with some very interesting companies about their business journey, about their growth plans going forward. And today, friends, we've got a very interesting pharmaceutical company by the name of Balaxi Pharma Limited. In fact, we have Mr. Ashish Maheshwari, who's the chairman and managing director of the company. Mr. Ashish Maheshwari, thank you very much for sparing your valuable time. And I think we'll definitely learn a lot from you in this short conversation about the company and its future prospects going forward. So I think we can start the conversation now.
Good evening, everyone, and thank you for having me on board for this small interview. I'm good to start.
Yeah. So Ashish ji, I think first question would be that, if you could please share and tell us something about the company's business journey. This is not a very well-known company. Of course, it is listed on the stock exchanges. If you could tell us, basically what is the company's business model, a short snap about the company's business journey till now. And if you could give us some key kind of summary points as to what are the key positives, the company enjoys in its respective market. So if you could add some color on that and begin.
Okay, I'll first quickly tell you about the journey of the Balaxi Group. I started this pharmaceutical business in the year 2003, and I started off as an exporter to other countries in Africa, mainly DR Congo and Conakry. And at that time, I used to be a trader, an exporter who used to get orders from the traders there and make them make the goods under their own white label, their labels, brands. And I used to get them manufactured in India and export them there. So I did that for around 5 years. And in one of my trips to Africa, I thought that why can't I also get my own store open there instead of selling to people who already have wholesale depositors? Why can't I create my own brand? So that was when I discovered a country called Angola, which was not very well known in those times. Angola had just come out of civil war in 2002. So I saw a lot of opportunity in Angola. And but by that point of time, it was 5 years, because of the demands of my various clients that I had in Congo and Kinshasa, Conakry, I had a range of around 200, 225 products, which I could get manufactured from various manufacturers in India. So I was not restricted by any dosage form. It could be tablets, it could be capsules, it could be injectables, infusions, liquids, suppositories, anything. Because I was not tied up to any one factory. I used to use many factories for my production. So I then opened my own depot in 2008 in Angola, my first wholesale depot in Angola in 2008 with a few 100 products. And then we took off from there. We opened one store after the other, one store after the other, and we reached a number of around 17 stores in around 2014, 12 stores or something. When it became of a certain size. So from there on, then we moved on to Central America, because I wanted I could see some competition coming in Angola. I had a free ride in those years. So I moved on to Central American countries like Guatemala and Dominican Republic, where I opened my offices because they are what are called semi-regulated markets, and they have product registrations, which take a lot of time to get products registered there. So I moved on there in around 2015 or 16, I think. and I opened my depots there in 2018 or so, 2018, 2019. So I took over a listed company in 2017, and then I started doing my business in the listed company in the financial year 1920. So 1920, till now we were doing business as a private limited company. In 1920, I started doing business in a listed company, and then I consolidated all the businesses that we have everywhere under the listed company, started consolidating them in 2020, 21, and completed my consolidation in March 2022, making Angola a wholly owned subsidiary. So that is about the journey of the Balaxi Group, and our business model is quite different. It's a unique model. It's called a stock and sell model. Now, I don't have data to say this, but more than 95% of exporters from India, people who export, India is a very big export center for medicines. More than 95% of the exporters export to other distributors in other countries, like what I used to do between 2003 and 2008. Nobody manages or controls the distribution of the products in those countries. That is one limitation that exporters from India have. Second limitation that I have seen exporters from India have is they concentrate on the finished dosage form, for which they have their own factory. It can be tablets or capsules, or it can be one injectables, or it can be ointments, or it can be liquids. But nobody would concentrate on the entire spectrum of dosage forms. And people also used to concentrate only on therapeutic areas at which they were good in India. They wouldn't go beyond that. So mine was a very different business model where I did not concentrate on therapeutic segments as such. I just concentrated on the generic medicines or the number of products that I can do as per the demand in the market. So even as of today, there is only one more company in the listed space in India which is doing a business model similar to mine. And there's one company as big which is in the unlisted space. Even today, it's very difficult for an Indian company to go there in those countries and manage, because management of on-ground infrastructure and on-ground staff in those countries is a very fine nuance. Human resource management is the biggest asset that this company Balaxi possesses. We have a very fine human resources management model where boys work for us as if they own this company. It's a very fine model we have. So that is one thing which we are doing very differently. Another thing that we are doing differently is we are going in for registration of the Central American market in hundreds. Our minimum capacity at which we open a store is 100 products registered. At least 75 of them are registered. So with that kind of availability on the ground, we have seen that over a period of 1 or 2 years, distributors develop a lot of faith in us, and our corporate brand, Balaxi Umbrella, it gets established. So this is a very different business model which cannot be replicated very easily, though it may sound a little easy. It cannot be replicated. One, for human resources management in non-English speaking countries, cultural integration, and two, the number of products we are able to get registered because of the huge regulatory department we have, and we give across all dosage forms. So these are three things which we have integrated very well in Balaxi, and that differentiates us from others in this market.
Okay, fine. I think very well articulated, Ashish ji. Ashish ji, tell me one thing that I was reading your annual report where it was mentioned that company has always followed an asset-light model till now, and now you all are moving to an asset-right model. So I think if you could share some idea as to what does this mean, and does this mean that now Balaxi would get into the manufacturing part? Because up till now, I believe a lot of your production was outsourced. So if you could give us some color on that.
See, till now, even as of today, 100% of my production is outsourced to WHO GMP compliant factories in India, China, and Portugal. Till now, I have not invested in fixed assets because all the capital that I used to generate used to go into the expansion plans that I always have. So I started off with nothing. So whatever capital is there in the company today is all used towards stocks and debtors. Now going forward, we feel that after the next generation has come into the business, my son and my daughter, they have a value proposition now that we have to now go ahead and put up a factory, because We are right now in semi-regulated markets where WHO GMP is the norm, right? Going forward, after 4 or 5 years, when Central American market, till now, we see visible growth in Central American markets for the next 4 years because still we are new there, 2 years old. But after this, we have to expand to bigger markets. Let's say the CIS countries we have to expand to, the Southeast Asia countries we have to expand to. Their WHO GMP is not the norm anymore. They need an EU GMP compliant factory. Now, WHO GMP factories are available dime a dozen in India and China to do contract manufacturing for companies like us who have the stakes at very reasonable margins. But EU GMP factories are not available, so many factories, to do job work for us at a reasonable price where they can make money and we can make money.
Okay.
So EU GMP factories charge a lot for contract manufacturing. So that is one reason why we are setting up our own factory today, because we have the internal accruals and the cash to provide for it, and with the next 5 years in view. Secondly, in Central America, whatever goods that I sell today, those 150 products that I sell from a WHO GMP certified factory, which have a COPP and all that. But we have found that the medicines that are made in an EU GMP factory, the efficacy is much higher. Is much higher than goods made in a WHO GMP certified factory. So we want to move our bestsellers medicines in Central America and get them manufactured under our own quality control norms in an EU GMP factory. So the efficacy is good, and that will be a differentiator which will differentiate us from our competition tomorrow. That we are making these at the same price, we're going to give you better medicines. And our registration process, thirdly, registration process takes a lot of time, 1.5 to 2 years in any country, 2 years, up to 2 years. So when I have an EU GMP certification and I present that to a Ministry of Health, then I am given priority for getting the product registered. That EU GMP is now becoming the norm slowly everywhere, and EU GMP factories are not available everywhere. That's the reason why we are going to making our own factory. We'll be making tablets, capsules, and injectables there. We will still be outsourcing liquids and ointments and infusions and other things. But these 3 things we are going to put up our own, and we are going to be EU GMP compliant.
Okay. Ashishji, one more thing which I wanted to know from you is that you said EU GMP certification, you will be going in, you will be putting up your own manufacturing facility. Now, what is the kind of capital expenditure which the company is planning? Because this obviously will require a reasonably large capex. And what time frame can we expect all this to actually materialize? If you could give us some idea, maybe not exactly, but maybe in the next, say, 1 or 2 years, can these plans be completely fructified for the company?
See, the detailed designing is in progress for the plant, and we plan to break ground sometime in the 3rd or 4th week of August. And 18 months is what has been told to us by our consultant and our turnkey project provider. We have selected the #1 consultant in India. He has a track record of doing projects. So he says that 18 months, from between 18 and 22 months, the project will be completed. So if we start in August 2022, I'm thinking by April 2024, we should be into production. And as this is looking like more of a backward integration project in the initial stage, it will be a forward integration project after it is built. We will have one shift fully running from the very first day, is what I think.
Okay. Fine. I think Ashishji, definitely it means that possibly FY24 should be a year where we could see a kind of a significant jump in your revenues, because once the manufacturing facility comes in, obviously, as you mentioned, that obviously revenue contribution from that new facility will start. Tell me one thing, Ashishji, that you said Angola and Central America are your key markets. Any other markets where Balaxi Pharma has got a large presence, in terms of the top 4 or 5 markets which you serve?
No, we are present in Angola. In Central America, we are in Dominican Republic, we are in Guatemala, El Salvador, Honduras, and we are on the way. We have opened offices in Chile and Ecuador. So we have our work cut out for the next 3 years in the Central American markets. We don't need to go to Southeast Asia or CIS for the next 3 years. Our work is fully cut out in these markets.
Okay.
Our next targets are going to be Southeast Asia and CIS countries.
Okay. And whenever you export, Ashishji, just wanted to know, whenever you export these products to these countries, Do you follow a proper export hedging strategy? Because obviously all companies root their exports in one single currency, that is the dollar. But in your case, how will the dollar impact your business? Like you all export to most of the African countries. So dollar appreciate hota hai, rupiah weak hota hai. So usse what kind of benefit or negatives will the company face? If you could just simplify that for us.
See, there are two kinds of foreign exchange fluctuations that our company faces. One is when we export from India in dollars, the rupee dollar appreciation affects us, because that is the first effect we have. But in the last so many years of my business, only once in 2008, I booked a loss on ERF, exchange rate fluctuation. Only once. Never ever have I booked a loss on exchange rate fluctuation. If you remember, 2008 में एक बार 40-42 rupees dollar हुआ था once.
Exactly.
Only that time I booked the loss. After that, I've never booked the loss in my 20 years of working. So I don't hedge anything against rupee to a dollar. Even now, if you see, it is 80 rupees to a dollar, and I expected at 75 rupees to a dollar.
Yeah.
The second effect that this company has to face is when in those countries we sell to the local people there, and we remit the funds in dollars, right? So there also there is the same problem of depreciation of the dollar. So here we are exporters, so we make money when our currency depreciates. We make money because we are exporters. But in those countries, we lose money because we are importers.
Yeah, exactly. Okay.
So national hedging हो जाता है हम लोगों को, there's a national hedging going on, and Africa sometimes behaves a little weirdly. Like in 2016, when there was this oil price crash, 2015-16, then Angola currency depreciated very big time at that time. So we had to book a one-time loss. Yeah, we have to book a loss only on the money which is there in the bank.
Okay. Yeah. Okay.
We don't have to book any loss on the stocks because we raised the prices.
Yeah, exactly. Okay.
And because of the wide establishment we have, the range of products we have, people take it. And pharma is something which is always goes well even in recession, because you can't avoid taking medicines.
Okay. Understood. I think very well articulated, Ashish. Now, Ashish ji, tell me one thing, that in terms of segments, if you could give us some idea as to which are the key segments, the company has been exporting. If you could give us some broad idea, amongst whether it is antibiotics or whether it is therapeutic segments. And most importantly, how many registrations does the company currently have, for exporting these products? If you could give us some data points.
See, in Balaxi, in fact, we got it made when we wanted to make an investor presentation कि अपन कितने therapeutic segment में है, because our choice of products doesn't depend on therapeutic segment, depends on the demand and what our distributors tell us.
Exactly.
So we are in 29 therapeutic segments.
Okay.
So therapeutic, how many therapeutic segments in India is not very this thing. 29, it's a big number to listen to. But the products are around 250 products, right?
Okay.
So that is our key factor in driving sales. So 640 products we have registrations as of today. 140 products are pending for approval in various ministries of health. 485 product dossiers are being made in our various factories where we get job work done and being updated in our offices.
Okay, understood. I think, Ashish ji, one more thing which I saw in your annual report and your presentation is that, the company has got a consumer branded kind of business also, where a lot of products are there. So now please tell me, what was the intention of starting this business along with the pharmaceutical business, and how big is this business opportunity? ये कितनी बड़ी opportunity है आपके लिए आगे चल के?
I started this business in 2020, pre-COVID. The reason we started this business in Angola was that we saw some kind of Balaxi is a well-known corporate brand in the households of Angola. Balaxi का दवाई है, Balaxi का दवाई अच्छा होता है, some kind of a visibility or recall we have. So FMCG is a segment which was doing very well in Africa at that time, and we realized that when you are a brand in the pharmaceutical space, in the medicine space, in the minds of the consumer, and consumer is consuming your medicine, when it comes to something like a biscuit, various kind of biscuits families eat and children eat, basically. So there is some kind of a brand recall for families. Arey, Balaxi ka biscuit hai to acha hoga yaar. Okay. And that strategy played off, and we had to, bolt on only on our distribution expertise.
Exactly.
We are there in 17, we have 17 godowns in wholesale depots in Angola. Every 200 kilometers, we have a wholesale depot in Angola. So for us to start, we have a distribution expertise. We already had fleets of vehicles. We have people on the ground. Everything was there. So we started our own brand in biscuits. We took a central warehouse in the capital city, and our boys in the pharma stores used to display the biscuits, and our biscuits started selling very well. So we did very well till this ocean freight hike, the huge hike in ocean freight hit us in FMCG, not in pharma.
Exactly.
$4,000, what we used to send freight, became $16,000. And FMCG, the FOB value of the goods is $10,000 to $11,000.
Exactly.
So, pura costing went for a toss. And as it happened here in India, all FMCG companies are now playing on the grammage, what to do with the grammage and reduce the.
Exactly.
So FMCG funda is the same. यहाँ पे 5 रुपए का पैकेट चाहिए, वहाँ पे 50 रुपए का, वहाँ पे लोग कहेंगे 50 रुपए का पैकेट चाहिए.
Barabar.
But then we had so much of goods in transit that for 6 months we didn't ship any goods because demand गिर गया पूरा वहाँ पे, and we had bigger packets.
Exactly.
So 6 months from October to March we didn't ship out any goods from India at all.
Exactly.
And from April, May, when the freights have come down to $7,000 now, we have started shipping again, and we have reduced the grammage. We worked on it from a normal 42 to your 32, from 50 to 42. We have worked on all that, worked on the price point. And now we are seeing the business coming back slowly to us. We are getting orders every month.
Okay.
Now about the opportunity that this business is. Biscuits, India is one of the biggest exporter of biscuits, what we call biscuits. Okay. Our kind of Indian biscuits, we are the biggest exporters. And the two biggest exported countries of biscuits from India that biscuits go to is Angola and Haiti.
Okay.
Angola, we are present, we are very strong, and we saw the movement pre-COVID. Now we are again seeing it. Haiti is served by Dominican Republic. Nobody, no business company or business house or businessman works in Haiti because of geopolitical reasons and whatever. So Haiti is completely served by Dominican Republic, and we are very well established in Dominican Republic also. So that was one of the also things that we have to just, it is a natural opportunity for us where India is exporting the biggest quantity to Angola and Dominican Republic, and we are so well established there. And there is some kind of a recall and synergy between these two things. So we see a lot of opportunity because Angola is one country. Then there are other countries in Africa where we can go and sell our biscuits, in Dominican Republic, in Guatemala. So we started this business with that view. And once we reach a critical level of sale in that FMCG part, then we will think of setting up our own small factory for FMCG.
Okay.
In FMCG, margins are very thin, volumes are good.
Exactly.
Margins are thin, volumes are good. So when we set up our own factory, I think our margins are going to shoot up by 60-70%.
Okay.
In pharma, when I set up my own factory, my margins will shoot up by probably 12-15%. That's it.
Exactly.
But in FMCG, it will shoot up by, because they work on thin margins and we work on thin margins.
Exactly.
So that is the idea of FMCG. It's getting a little delayed because the ocean freight shoot up. But now it is getting back on track, and I think by the end of FY23, we will be on track with FMCG.
Okay. So fine. I think good to hear. So hopefully, this business is also a very, kind of a potential large revenue generating kind of opportunity for you. Tell me one thing, Ashishji, that, I was seeing your operating margins, especially for the last 2-3 years. They've been pretty good, amount 17-18% you make at the EBITDA level. Now, tell me one thing, outsourcing, आप outsourcing करते हो, manufacture कुछ करते नहीं हो. Then how is it possible that, you get these kind of 17-18% margins? We don't see these kind of margins in other, pharmaceutical companies. वहाँ पे तो 10% भी बहुत ज़्यादा होता है. और is it because Angola is a very kind of a very closed market where you have a large market share, or are you getting better prices? Now, what explains to these good attractive EBITDA margins?
I'll tell you, it's quite simple actually. Balaxi captures economic interest at various points. Okay. Now, as a manufacturer, we are not capturing, agreed. But as a producer, when I do contract manufacturing, I get my pricing very tight from my suppliers.
Okay.
Because they're not selling to me, I'm getting them
Yeah. manufactured
from them. There's a
Yeah.
difference. Okay. And my manufacturers are working with me for the past 18 years, 20 years.
Okay.
So they have got used to getting orders from Balaxi on the 5th of every month, on which their factory runs for 20 days, 25 days. So I get very good pricing, but at the same, now I'm a producer, though I'm not a manufacturer, I'm a producer because I can control my pricing here. Then I'm an exporter. So I capture economic interest there also. There are many factors which only produce and give to an exporter, what I used to do, right?
Okay.
So he used to get production margin, I used to get exporter margin. Now I get exporter margin.
Okay.
Then I'm also an importer in that country.
Okay.
So I capture economic interest as an importer also. And then I'm a distributor also in that country. So I'm capturing economic interest everywhere. In Angola, I'm a wholesaler also.
Okay, understood.
So I'm capturing all these margins.
Okay.
And if you look at my expenses in my balance sheet, my consolidated balance sheet, because last year will not reflect that because Angola was not fully consolidated. But if you look at the kind of expenses we have, it is very high expenses. So we have to price a product very high, and I have been a bottom line driven guy. So I've always, in whichever market I am in, we are the highest priced always. And why we are able to get away with it is our philosophy of having enough stocks on the ground. There are people who don't have so many stocks on the ground, and a retailer today knows that if he goes to a Balaxi godown, he can come at 7:30 in the morning, pick up his goods, and go back and open his retail store at 9 o'clock. He'll not have to go to 3 different stores. And he knows that he will not have any quality issues. And he knows that Balaxi, if there is any issue with any packing or anything, they will not question me. They will return it back.
Okay.
So that's a goodwill we have built over the years.
Oh, fine, understood. I think very clearly and nicely articulated, Ashishji. Ashishji, tell me one thing on the working capital side also. I've observed something interesting that you get a good amount of suppliers credit. That also is one of the good reasons why your working capital has been more or less been maintained well. So suppliers credit maybe आपको अच्छा terms conditions मिलता है. I mean in this also I think
I got your point. I got your point. Very good point you have raised, Avinash. It's a very fine point that you have raised. कि इतना बड़ा credit क्यों मिल रहा है आपको? So I and my CFO also we discussed this. Actually, what happened was, if you look at my balance sheet today.
Yeah, please continue.
Okay, because I'm not able to see you. Okay, so if you look at my balance sheet, you will see creditors of around 52 crores, right? As a cost of goods sold, it comes to around 97 days, right? Which is a very high credit to get. Now, out of that, we have consolidated Angola in the last quarter. Angola has become a wholly owned subsidiary of Balaxi Pharmaceuticals.
Okay.
In the January to March quarter. Now, in the Angola balance sheet, Balaxi Angola balance sheet, there are 17 crores of creditors which are not within the group. Okay. All the creditors everywhere are all Balaxi Pharmaceuticals or Balaxi Global, right? Okay. Angola has 17 crores of creditors, which is not Balaxi Pharmaceuticals. These 17 crores of creditors are the legacy creditors, which are there in the books for the last more than 1 year because they are coming, because I told you they were different entities and I have consolidated them under the Balaxi group, Balaxi Pharmaceuticals. Okay. So these are creditors which have to be repaid. We will repay them as soon as we have some extra cash, right? So our corrective figure for creditors will be 35 crores, which comes to around 65 days of credit. We get that kind of credit because from India, we are able to get 90 days of credit from our 90 to 100 days of credit from our suppliers. And from China, we are able to get around 30 days from our suppliers.
I think Ashish, you understood, but tell me one thing that, after this China problem and all these, geopolitical kind of issues, is the working with China and all the companies there, is it normal? I mean, on ground and on paper, we keep hearing about a lot of things about China. But otherwise, is business normal? And do you find any challenges, with Chinese suppliers or maybe with some sort of Chinese companies you all are working?
Actually, not at all. There has not been any change at all. China is working the same way it is working. Only thing is China is becoming a little tight in terms of supplies, because China is flooded with orders right now. So we have to do more of our planning better with China. And remember, our Chinese products buying is done by our Dubai subsidiary. We don't do it from our Indian company.
Okay.
And the goods are shipped directly from China to the destination countries. So these geopolitical issues do not make a difference to us at all.
Okay, fine. Ashish ji, just one or two last questions before we complete the program. I was wanting to know that now you said that Central America, Angola are products where you used to just export them. Now you're going into manufacturing. That in the next couple of years, next 2-3 years, will manufacturing be your major focus area so that you all can get greater value addition for the company? Can we expect that manufacturing activities could possibly be as equal or maybe form a significant part of your revenue, at least in the next, say, 2 to 3 years, post FY24 onwards?
No. For me, manufacturing for Balaxi is a backward integration program. It will become a forward integration program later on, but right now it's a backward integration program. For us, the major concentration is expanding our sales in our existing business, expanding the number of registrations we have, and we see one-sided growth for us in Central America for the next 3 or 4 years. So manufacturing activity is not going to be a focus. That is why we have got the best consultant in the business and we are giving him a turnkey way to do things. Okay. And manufacturing will become the focus after 3 or 4 years when we are done with Central America growth, when we are looking at other markets. But right now, our focus is only on sales.
Okay, understood. I think very, very clearly said. Now, tell me one thing, Ashish ji, that in terms of the basically in terms of the shareholders, who have been with your company for a long time, especially the listed entity, company has been doing very well in terms of profitability numbers, in terms of the revenue as well as the EBITDA levels. Now, in what way are you planning to reward the shareholders? Because now you are a listed entity. So obviously all of us see the company on the stock market. So aage chal ke any dividend payout policy are you planning, or any kind of distribution ratio you all are planning, so that normally shareholders are providers of capital for the longer term. So obviously with that in mind, any kind of thought process you all have done at the board level for this kind of issue?
See, what we are looking at is from a value creation point for shareholders, purely from a value creation point for shareholders. We are setting up a world-class factory and we are going to control our production in terms of quality also. And we are going to have a EU GMP plant, it will be a lot of value creation in terms of the valuation of the entire company. When I say valuation of the entire company, then you know what I mean, right? Whatever is the market cap today, it's going to be something else. Once the factory is there, the value perception will be much higher. And shareholders will be handsomely rewarded, those who are going to be with us in our journey. As far as dividend is concerned, right now, I don't think that for the next 3 years or so, we must have a dividend distribution policy, because we are going to start a capex program and we have very aggressive plans for expansion of sales. So after 3 years, we may get into a dividend distribution policy, but not before that. In terms of value of the company, which will be created, once the capex plan is over, it's going to be a tremendous reward for shareholders.
Ashish ji, one question which is very important for a medium-sized company like yours, which is growing aggressively, is that what is your responsibility? Is it getting new business for the company? Is it on strategy? How do you spend your time for the company's management, and how are you assisted? In terms of other professional managers or maybe some other family members who have joined the business. If you could share some thoughts on that.
See, we have divided our business into, if geographically I have to divide, if I have to divide my business, is Africa and Central America, right? So we have divided these geographies into Africa and Central America. Central America is fully headed and handled by my son, who is a graduate in economics and business from University of Atlanta. And he travels to Central America for 20 days every second month. That is our policy of managing it. And in every country, we have in every store in Angola, we have 2 Indian managers. We don't leave it to local people. And then we have a staff of 8 or 10 people in the Angola office. In other countries, we have 3 Indians always and 1 Indian on the bench because it's a distribution model. And these are always, we always have Indian expats handling them sent from here, from India, not hired from anywhere else, right? So that is one business model. And Africa, I look into Africa, but I have a very able team who has worked with me for 15 years. My planning head is a very able guy. My procurement is looked after by my son, and we have a procurement who is a very able guy. So human resource is something that I told you, we have a fine nuance of handling it. On the corporate side, we have my EA Sunny who handles things on the corporate side. On the FMCG side, it's my daughter who heads that business under my guidance. Of course, everything's under my guidance because they're all very young now, but I've given them complete independence to handle it, and that's how we handle the entire business. Strategy-wise, it's my thing to set up this factory. I will be the in-charge guy who will set up this factory along with the consultant, decide on the capacities, decide on the capex, decide the entire, and then we have very able CFO, Amol Mantri, who is an expert in handling all these 7 or 8 currencies, and he has everything in his head. So as a management team, we have a well-tuned, high-tuned team who is very well motivated in terms of doing something for the company. And it's a growing company. Everyone is enjoying what they are doing.
Oh, fine. I think Ashish ji very well articulated. My last question to you is, Ashish ji, you have been in the industry for such a long time, and we have seen, pandemics like the COVID for the first time. So in your assessment, when you export products to, Central America, Angola, what are the key risks, which your business faces? Like, hopefully everything is getting normal now. COVID is no longer being spoken. Business normalcy abhi वापस आ रहा है. But typically in your business, what could be the kind of areas where possibly which could, pose as little risky for you? I mean, obviously every business has got its pluses and minuses. So in your business, what could be the potential risk which could arise, if at all, if you could please share?
I don't see COVID as a risk. I see COVID as a risk on the supply side, but I think we have all matured from that now. I don't see COVID as a risk on the supply side. Currency, Central America, it is not a risk at all. It is not a risk at all. It is as good as India. They fluctuate around 5% a year. In Angola, sometimes we see currency fluctuations of 20% in a year, once in 3 or 4 or 5 years. That's a slight risk we run, but that is only, as I told you, on the bank balance that is there in the local currency. Okay. This logistics also has pressured us a lot, because where we used to have 60 days of working capital in transit, now we have to put 90 days of working capital in transit itself. So logistics is something which is coming out. Unless until something drastic changes somewhere, I don't see much of a risk in our business. It's a safe business and it's a very steady business.
Oh, fine. I think Ashish ji, thank you very much for your valuable time. And I think we could get a lot of insight from your discussion. So all the best. And, we'll definitely like to keep in touch with you in future also. And my best wishes to you and your entire team.
Thank you, Avinash. Thank you very much. Thank you, everyone.